Good morning, everyone. I'm Kevin Hincks, and welcome to the Daily Trader with Kevin Hincks. We're going to take you through two practice trades today in Nvidia and Apple. Two names in the news. Nvidia is always in the news, but Apple's been in the news a lot the last couple days for several reasons. We'll get to those in a moment. But first, let's get to our first trade of the day, and that is Nvidia. The paper money trade we're looking at here in Nvidia. Remember, a couple things about Nvidia. If you look at a one-year chart, Nvidia hit $140 for the first time June 2nd of last year. So if you look at a chart since then, you can make a pretty strong case that Nvidia, despite big beats in earnings, big beats in revenue, beats and raises, has been flat this whole time. It just went through $140 today. It closed yesterday below the $140 mark. So it has been relatively flat for 6 full months. So now it has gone back through $140. And as we get to the new year, things may be perking up a little bit for Nvidia. So the paper money trade we looked at here was something in the diagonal family, giving you, some deltas in Nvidia. So I went out to the January 24th expiration, bought the 145 call slightly out of the money, and then sold the January 10th 150 call. So doing the 145, 150 call diagonal, that we have it in there about $4.20. It's trading about $4.05. So the stock has backed off from its rally today. So it's trading pretty close to $4. And you could do this $5 call diagonal. Remember, it's January 10th to January 1st. It's about a 2-week trade here. It's next week is what you're short. You're long about 3 weeks out. So January 24th to January 10th, buying the 145, selling the 150 call, spending right between $4 and $4.20. That's the risk on the trade, is the debit paid here. As you can see, your target for that strike at next week's expiration, $150 in Nvidia. So you're looking for a move back up towards 150. Remember, the recent high, 152.89. So you're looking for something at or near, getting up close to the recent all-time high in Nvidia. So a bullish call diagonal in Nvidia. Now let's get to our second trade of the day, and that is Apple. Now, Apple, if you look, we've been talking about this trade a lot. We talked about it on this podcast many times, how overbought it was, how the valuations were extremely high, got up to about a 42 PE. Well, it's not a 42 PE anymore. It's back below 40. Still elevated, though, historically, from a price perspective. Why did it sell off pretty violently yesterday? Price cuts in iPhones. Remember, there's good news out today. Bernstein raised the price target to $260 from $240. Bank keeps outperform rating. Bank of America talked about first quarter Apple App Store revenue up about $8.1 billion, up 15.4%. That's both good news. But remember, this is an iPhone company that drives most of its revenue, and iPhones. If you look at a chart of Apple over the last 6 months, when they announced Apple Intelligence and the iPhone upgrade, and that you needed a 15 or a 16 to get Apple Intelligence, which triggered the expectations of a massive upgrade cycle in Apple. Well, we're not sure if that is happening just yet, and the stock has a lot of it priced in already. That's why I think you've seen the stock back off from $260 down to $242, still around a 40 PE. So Apple, we kept it pretty simple here in the short term. The paper money trade I looked at here, going out just a couple weeks to the January 17th expiration, and I sold a call vertical above the market, selling the 250, 255 call vertical. We put it in there about 90 cents. It's currently trading about 75 cents. Maybe if you think that's not enough credit, remember, we preach something pretty important here. Whatever trade you're putting on, assuming that risk, make sure you're getting paid for the risk you're putting on. Remember, this is a $5 short call vertical, selling the 250 call, buying the 255 call. If it's trading too little, maybe you lower the strikes on this. In this case, you're short the 250s, long the 255s. If you sell it for 90 cents, you've got about $410 of risk. If you sell it for less than that, it's $500 minus whatever credit you take in is the risk on this trade. The max you can make on this trade is the credit that you take in. Now, it's a pretty high probability trade because it's out of the money like that. If you go to the Jan 17 expiration and look at the 250 call, the probability of finishing out of the money is currently about almost 78%. So in terms of probabilities, very high probability. It's collecting theta, it's risk defined, it's high probability. 3 pillars that we look at in a high probability vertical, either on the call or put side. So 3 scenarios where this trade will be profitable. If Apple stays right here, it's profitable. If Apple rallies but doesn't make it to $250, it's profitable. If Apple goes down, it's profitable. When is it not profitable? What's the risk on this trade? I'll move through the break even of $250 and whatever credit you take in. If you take in 90 cents, it's $250.90. If you take in 75 cents where it's trading right now, it's $250.75. So understand the risk, understand where you break even in this trade. It's a high probability trade that's risk defined. But like I said, if Apple were to move through 250 is the risk on this trade. And again, the max profit you can make is whatever credit you take in. So a long call diagonal in Nvidia, a short call vertical in Apple. That's Daily Trader for today. I'm Kevin Hincks. Have a great day and a great weekend, everybody.